Get rid of me. We don't need to look at me. Here we go. Okay, so just minimize this so I can see what I'm doing. So what we're going to do today is look at expenses to reduce your tax bill, how to build wealth for the future, and we're going to look at limited companies for freelancers. A couple of things that came up there on the poll. VAT I hadn't planned on covering, but since there was a number of people who had concerns about VAT, just to remember that the thresholds for VAT, when I say threshold, it means what level of turnover do I need to get to before I should register for VAT? So I'm going to assume most people here are in the service industry. Okay, you're not selling products, you're selling your skill, you're selling your expertise, so you're in the service industry, and your turnover in the year before you need to register for VAT is €37,500. Now that's not your turnover every year. You don't deregister and then register again, but you make a decision at some point. Should I be registered for VAT? Now, if you're a lifestyle freelancer, and a lot of people are, and that's perfectly fine, and you're only going to ever make 30,000 euros worth of revenue in the year, then you don't need to register for VAT under the rules or under the laws. Excuse me. But the question to ask yourself is maybe, why wouldn't I? Because most of the work you're doing will be for VAT registered businesses. So those businesses are going to be able to claim the VAT back. And when you're not registered for VAT, then you're losing out on money you could be claiming back. So if you buy a new Mac, a new phone handset, anything you're buying essentially that has VAT on it, you can claim the VAT back as a business expense. So you're actually getting cash back. The VAT you're charging to your clients, they're going to claim back somewhere along the way. So it's a cash flow item. And as long as you manage that usefully and properly, it shouldn't ever be a problem. So if anybody has any other questions about VAT, I should say, look, stick them in the chat box if you've got questions. I'm going to do a little Q&A later. If I go through all of these expenses we're going to look at now, and if you still have any questions about what you should claim or can claim, you can either, if you want to ask them anonymously, do that in the chat box, or if not, maybe just raise your hand and Una and or Peter will call you out there. So the first thing I'm going to look at, even though I said, look, we look at three different things. Number three, limited companies for freelancers. And the reason I'm going to talk about limited companies first is because a huge amount of the tax benefits of being self-employed come only when you operate in a limited company. Now, whether that's fair or not is not really the case today. As a sole trader, there are certain things you can't do that you can do in a limited company. So it's worth bearing that in mind. That's Megan there. She looks very happy because she's found about all the tax she can save in a limited company. It's what I like to think. Everybody else tells me she's actually listening to Tommy Tiernan and Hector and Larita on their podcast. But anyway, limited companies for freelancers. As a sole trader, you're going to make some money, okay? And I'm just going to assume that you're a little bit further along on your freelancing journey at the moment, and that you're maybe making 75,000, 80,000 euros, 90,000 euros, something like that for the purposes of the example. But you also might be somebody who's able to live on 50,000 euros or 60,000 euros. So you've got this gap in the middle between what your profits are and what you actually need to live. And you might be saying, I'd like to save that money. And I'll look at savings in a while and how to do that tax effectively. Or you might say, I'd like to put that into a pension. Now, as a sole trader, you get taxed on the profit. So you get taxed on, let's use the figure of 80,000 euro. Even if you've only spent 60,000 euro or taken a salary of 60,000 euro. So you're paying income tax on the additional 20,000 euro at 52%. So that extra 20,000 euros you should have sitting in a bank account, you're going to pay 10,000 euros tax on that. And there's only going to be 10,000 left sitting there. In a limited company, the tax rate is 12.5%. So you're still paying tax on it, but at a much lower rate. So in terms of having surplus cash that you're trying to save for a rainy day or save for an investment in something, limited companies are much better than sole traders. The other thing about if you're operating through a limited company, you take money out of the company, that has to be taken out by salary. So you're operating salary. So you're saying this month I'm taking out €1,000. Next month I might take out €4,000, depending on the ebb and flow of cash. And because it's operated through payroll, you pay taxes as you take that cash out, and those taxes get sent to the revenue commissioners. So at the end of the month or the end of the year, you're not thinking, oh God, what's my tax bill? Because you've already paid all the taxes on all the income you have personally earned. So traders, I know from experience, sit there and they go, I don't know, I'm like, what's my tax bill? I haven't done my accounts. There's expenses I'm missing. End of the year, rush to kind of go, where am I? What are my profits? And you say your tax bill is 12,000 euros, 15,000 euros. People are going, I don't have that kind of money. I don't have that kind of money because they've spent it, because they've seen it in their bank account. Whereas a limited company, you say, well, I've got 5,000 euros in my bank account this month. What am I going to do? I'm going to talk to my accountant. And the accountant says I can take maybe 3,500 euros of that into my own pocket, and 1,500 euros needs to go to the revenue commissioners. So limited companies, I think personally, are much better for personal cash flow reasons when it comes to looking at your tax bill. There's also a restriction on pension contributions, and I'm going to go into pensions a little bit later as well. But so I'm in my 40s, so I'm restricted to putting a maximum of 25% of what I earn into my pension. Now, if I had a particularly good year as a freelancer and I'm a sole trader, I could still only get tax relief on 25% of what I put into my pension. Sorry, 25% of what I earn. But if I operate through a limited company, I can still do that and more, because the same restriction doesn't apply when your limited company makes a pension contribution on your behalf. And the other thing, and I'll cover it off now, is that if a limited company makes a pension contribution into your pension for you, that's tax-free for the limited company, okay? No tax on that. If you pay money into pension as a sole trader, at the end of the year, the revenue commissioners say, well, we'll give you 40% back, assuming you're earning the top rate of tax. So there's 40% tax relief. So if you put in €1,000, you're actually reducing your tax bill by €400, 40%. But if the limited company goes in, you still pay PRSI and you still pay universal social charge as an individual, but that doesn't happen in a limited company. So for every €1,000 you put in, it's actually really only like putting in €600 as an individual, but you can get the same €1,000 for only €480 as a company. I hope that makes sense. Essentially, there's 52% tax relief in a limited company and only 40% as an individual. Then there's other things we're going to talk about. We're going to look at cars and electric cars, and again, VIK and all of those, a couple of little things can't happen when you're a sole trader versus a limited company. Now, I want to move on from this, but the last thing I'll say on it, people think I need to be earning a load of money to be a limited company. You don't, but you do need to be at a certain level. You need to be at a kind of level where this is a full-time role or full-time job. You know, it's not a lifestyle freelance business, because you're probably okay as a sole trader if it is, okay? Because you're probably not going to be earning enough to maybe avail of some of the tax breaks that you can do. And then people always get nervous about limited companies and they're hard to set up when there's more compliance. There's not. If you're going to an accountant anyway, you know, the workload is pretty much the same. There's a little bit more work, but that's for us to do, not for you to worry about. So that's what I'll say on limited companies. And again, if you have, I'll keep an eye on the chat. And if there's questions in there, just throw them in there, folks, and I'll jump around a lot and answer those. So into expenses. Okay. What can I claim? When you look around or you're sitting at home, think of everything that I have there: your desk, your chair, your stationery, your bookshelves, your printing, you know, all these home office expenses. That's not actually a picture of me, but I have been in that scenario. Unfortunately, it wasn't makeup, it was highlight markers, and I didn't realize at the time they were permanent. So there was a bit of cleaning up to do after that. Anything that you buy that you can turn around, if the revenue commissioner is sitting across the table from you and they say, did you need this in order to do your work? And if the answer to that is yes, I did, then it's a business expense that you can claim. Okay. That's different to saying, do you use this in your work life, but actually 95% of the time you're using it for personal use, and it's handy to have from a business point of view. Was the purchase made exclusively for allowing you to work? Then if the answer is no, then typically it's not allowed as a business expense. If the answer to is it's pretty much 50-50 or it's 70-30, and here's the reasons why, and you have a story to tell around that, and it makes sense, then claim the percentage of the cost that's business related, but you can't always do that. But so when you think about home office expenses, you have to heat the house and you have to light the house and all of those types of things, but you probably do more of that because you work from home. So the revenue will say, well, okay, what size premises do you live in? So are you in a 2-bed apartment or are you in a 5-bed house? And depending on that will depend on, and how many people live there. Do you have, a family and 4 children, or are you living alone in a 2-bed apartment or in a 5-bed house, or with 7 people in a 5-bed house? And all of those things come into play in terms of, well, how much should I claim? How much is reasonable to claim as part of my business expenses? So everything is around logic. I mean, you're printing, you're going to buy paper for printing at home, you're going to buy ink for the printer, you're going to buy the printer itself. All of these things, if you need them for work, they're business expenses. If you need to buy an office desk, a chair, things that you probably said, I wouldn't have bought this if I wasn't working from home, definitely it's an allowable business expense. So look around you when you're working from home and think about, what am I spending? Because my granny had this saying, mind the pennies and the pens will mind themselves. I mean, if you think about what you need to spend money on, and one of the things people have said to me over the years, like, I need to get my tax bill down. What should I buy? What do you need? Don't buy something to reduce your tax, because you're going to have less money anyway, because tax relief is, even at the top rate of tax, is only 50%. So if you spend €1,000 for something you don't actually need, you're only getting €500 tax relief, and now you have €1,000 less in your bank account. So be clever with your money in terms of how much it is you should actually spend. Personal expenses then are next. So people, every time you put your hand in your pocket, you should be thinking, okay, how can I use this in a bona fide way to reduce my tax bill in business? So coffee at the start. So business development. I mean, if you're just going out and you're meeting one of the lads or you're meeting one of the girls for coffee every Thursday afternoon, 3 o'clock, and it's just something nice you do. No, that's not a business expense. That's your social life. But if you're going out and you're having lots of, if you're meeting Una and Peter for a coffee, or if you're going to meet a potential client, or that's all business networking. So yes, those coffees and those teas and those scones, they are allowable business expenses, because it's part of the dance of business development and trying to impress people and trying to get the business. Same goes with potentially business lunches. But at the same time, if you have a business lunch on a Saturday afternoon or a Saturday evening in Peplo's on the Green, and it's for 2 people, questionable. Was that a business lunch? 7 p.m. on a Saturday night, Peplo's on the Green. So be smart. Some people try and be really, really clever. I had a client one time, and he imported wine, and he from Italy. And he drove to Italy, and he brought his family. He tied it in with his family holiday, and they visited a number of vineyards, and he brought back all his business expenses. And I said, look, yes, you would have. He was driving because he wanted to bring wine samples back. So I said, yeah, the ferry trip over was an allowable expense. And he stayed in an Airbnb, and I said, yeah, well, you would have had to stay there anyway. That's an allowable business expense. And we went through all the different things, and he said, well, yeah, I had to eat. And I said, this is a receipt for a drive-through McDonald's for 6 people. That's not a business. You don't do drive-through business meetings in McDonald's typically. So, it's don't take the piss about stuff. You can be clever and you can tie in your genuine business meetings with some personal stuff to the side and then claim the business element of it. But don't claim the personal element.
Jimmy, just a couple of questions in. Do those expenses apply to sole traders as well?
Yeah, all of these expenses apply to business. So whether you're a sole trader, a partnership, or a limited company, once the expense is for a business purpose, yes, it applies. No problem at all.
What about work clothes?
Yeah, it's a really good one, actually. So safety gear. So if you're working on site and you're a builder, you need safety gear. Or if you're working in a pharma plant and you're told you needed to have like a lab coat or something like that, or scrubs in a hospital, yes. However, there was a case whereby a solicitor, believe it or not, took the revenue commissioners to court a number of years ago. It was a judge, actually. A judge took the revenue commissioners to court because the judge claimed the black suit and the gown that the judge was wearing in court, and said, I wouldn't have bought this black suit only for my work. And they actually lost the case. So his peers said no, because it would have been unsatisfactory for you to stand in court with a gown on, but otherwise naked for the world to see everything. So you would have had to buy some type of clothes. The fact that you bought a black suit is neither here nor there. You were just keeping with how people normally dress in the courts. So you can turn around and say, I bought a business suit because I was going to a business meeting. But you can turn around and you can say, yes, I do all of my work on I can't think of a kind of a creative solution.
Well, maybe if you were a videographer and you were out in, very stormy conditions and needed, very specialized rain gear, for example, that might be a legitimate expense.
It'd be a stretch, Anna. I mean, because if you're out working in the rain, we all probably have a rain jacket anyway. We do live in Ireland. But if you said no, it needed to be a high vis and it needed to have something on it and it needed for safety reasons. If it was safety, if there's a safety element to it, and I said it's highly unlikely. Like if it's a Helly Hansen jacket, no, that's a fashion item. But if it's an luminous yellow something with a silver stripe on the back, that is also waterproof, then yes. So again, it's you have to be practical about these types of things.
Okay, so note to self, then I better be sending back that package this afternoon after me.
And it depends on what's in it when you open the box.
Yeah, a couple of other ones. Training, presume that's an expense that can be written off.
Absolutely, yeah. And I mean, it's a really important one, and it ties down with the newspaper and books there on screen as well. So anything that you're used, so if you're in PR, then yes, a newspaper is absolutely something that you should be looking at it as a business expense. If you have an office where people come in, then you can buy newspapers and things and put them on the coffee table in the waiting area. But books that relate to your business, or business books where in terms of your upskilling, that's all learning and development. And the only reason you bought that book was to be better at your business or to learn something from a peer. So yes, they're allowable business expenses.
What about membership of golf clubs or tennis clubs?
So that comes there, say, under the gym section. So again, there is tax on those. There's BIK on those. However, if you operate through a limited company, so if I take the example of you're going to spend €1,000 on your golf club membership or your gym membership for the year, I'm assuming the higher rate of tax and rounding up because I'm not very good at maths, you have to earn €2,000 and then pay tax on it to be left with €1,000 in your hand, and then you pay that €1,000 to the gym or to the golf club. So you've had to invoice your clients €2,000 to get your €1,000. Now, if you did that, if your limited company paid for you, then what the limited company is doing is paying €1,000 to the gym on your behalf. The revenue is saying, oh, you got the benefit of the use of €1,000. We're going to tax you on that. And the tax is 50%. So you need to pay tax of €500. So now what's actually happened is the company has only had to invoice €1,500 because it's paid €1,000 directly to the gym and €500 to the taxman, being the tax on that benefit. Whereas a sole trader, you had to earn €2,000. And actually, as a sole trader, you can't give yourself the gift of a gym or a golf club membership, but your employer, which is your company, which you own 100%, can do that. So again, where limited companies come into their own.
Okay. Great. There's a few other questions in here. Are we okay to go through those, Jimmy?
I tell you what I might do. I might flag up a couple more slides on expenses, and if they're not covered in that, then absolutely, let's do those.
Sure. Okay.
Brilliant. Transport then. So transport, you could buy, your company or your business could buy a monthly or a yearly ticket for you, and there was no additional tax on that. So that was really, really tax efficient. With everyone working remotely, working hybrid, it's not the same anymore. So how can you maybe get around that? Well, one thing you could potentially do is say, well, I have my Leap card, which is my personal Leap card, and then get a second Leap card, which is a business Leap card. So you can actually turn around and say, well, every time I use this Leap card, it's for a business expense because it's somewhere I'm traveling to, because I wouldn't have incurred that trip unless I wouldn't have incurred that trip unless I was trying to go and get business. So transport from that point of view, whether that's a taxi, train, a bus, or whatever the case might be. And also car in there. I'll talk a little bit more about electric cars in a second, but again, if it's a bonus, so revenue have come down over the last few years really, really, really hard on people who are claiming travel and subsistence. They are saying wherever you're working for the day, so if you're doing a piece of work, for example, and you're in, I don't know, up on RTE site, Revenue are saying that for the day you were there as a freelancer, that's your normal place of work, and you cannot claim the trip from your home to RTE that day. However, if you're driving around to lots of locations and it's genuine that you're traveling, genuine business reasons that you're traveling to all these locations, then yes, you can claim. So you need to talk to your accountant and make sure you're claiming the right thing, because they're looking at that and they're starting to look for that information, not just in the corporation tax return, but in the personal tax return. They're going to start doing that, and they're going to say, well, okay, how much mileage you, so that's essentially tax-free money. Sole traders, again, can't claim mileage. You can't use the civil service mileage rate if you're a sole trader, because it's you paying yourself. You can, however, you can turn around and say, okay, what are my car running costs? The actual fuel, the tax, the insurance, the repairs, and you need to keep the receipts for all of those. And then at the end of the year, you can add them all up and you can say, okay, well, what percentage of all of those expenses was business related? And you might say arbitrarily 10%. You say 50%, it means you're doing a huge amount of mileage. And again, you need to have records to back that up. So just be careful with mileage and subsistence. It used to be one of those ones where people would just say, throw it in. There was no problem at all. Revenue were happy enough with it. But they've really started to clamp down on this. I like this one, small benefit scheme. Not a lot of people know about it. But again, only available for limited companies. Unfortunately, sorry, anyone who's a sole trader. But your employer can give you a gift. And again, your company employs you. They pay you through the PAYE system. They can give you a gift of a voucher or 2 vouchers. So it only works, but it's up to the value of €1,000 tax-free in the year. So you can take 2 €500 vouchers, a €300 voucher, and a €700 voucher. It comes to €1,000. If you take a €300 voucher and a €300 voucher and a €400 voucher to get up to 1,000 in the year, only the first 2 vouchers are allowable. So you're missing out on the last 400. So it's a maximum of 2 vouchers and it's a combined total of €1,000, but it's tax-free every year. Really small amount of money in one sense, like talking about 500 quid tax saved, but 500 quid tax saved. I mean, it's 500 quid. Mind the pennies, the pennies will mind themselves. Okay, so what can I claim in the bike to work scheme? Again, the bike to work is really clever, especially if you're cycling places. So the bike to work is where your employer, your company can, and it is open to sole traders, but there's a couple of conditions, and I should have checked those, but I didn't, so I apologize. But essentially, it's €1,250 the company can spend, the business, the employer can spend buying you a bike or bicycle equipment, and there's no BIK on that, okay? Which means there's no tax to pay. So it can be paid directly out of the company. So again, think about that for a second. If I wanted to go and buy a bike of €1,000, I have to invoice my clients €2,000, pay tax of €1,000 and be left with €1,000. But what they're saying is with the bike, you don't. So it's 1,250 for regular bike, €1,500 for an e-bike, or €3,000 for a cargo or e-cargo bike. So that essentially is a bike that has been modified to actually carry cargo or people other than the rider. So again, nice little thing that can be used if you're going to buy a bike. If you're not a cycler, if you're never going to cycle, don't use it, because you're just spending money. You know, you're not actually saving tax. You're just spending money for something you don't use. Electric cars then. So they started off being very generous with the BIK relief. In 2023, it's dropped from unlimited, then it went to €50,000 for a couple of years. And now for 2023, it's €35,000 and it'll drop in 24 and 25. So this is useful only if you're thinking of changing your car anyway, and if you're open to using an electric car, and if you have a limited company, because the limited company can buy the car for, let's say, take a Volkswagen Golf for €35,000. And in 2023, there's no BIK. So the company can pay all the running costs for the car, including the tax, the insurance, the fuel, and there's no tax liability to you as an individual. Okay, there's nothing additional you need to pay. You keep that car next year, let's say it's still worth €35,000. Now there's only a €20,000 BIK relief. So what the revenue we're saying is that the value to you now is the difference between the original purchase price, the original market value. And that's important, the difference between the original market value of that car and purchase price, because if you purchase a second-hand car, your tax liability is still going to be calculated off the value of what the car was the day it was bought new, even if that wasn't by you. So the original market value. So let's say you bought the Golf new this month, 35,000 euro. You get into next year, then they're saying, well, it's 35,000 euro, and now we're going to give you 20,000 euros BIK relief, which means the revenue we're saying you have what they call notional pay of 15,000 euro. You've had the benefit of 15,000 euro and you need to pay tax on that. So 15,000 euro is 1,250 a month, which is about 625 euros in tax. But for 625 euros a month, you're essentially getting your company paying for your car, your tax, your insurance, your fuel, your repairs, your car washes, anything to do with the car, because the company owns the car. So the company needs to maintain the car and look after the car. And typically, regardless of the amount of mileage you do, and you're looking to buy a car, and you're open to being an electric car, then that's always going to save you tax. Pretty much always going to save you tax, as long as these BIK reliefs are in there. Doesn't work with hybrid cars. So just to be aware of that, has to be 100% electric. Employing a family member. I'm just conscious of the time now, talking too much. So you can employ a family member. If they're directly related to you, they can be as young as 14 years and it's legal. And if they're not directly related to you, they need to be at least 16 years old and it's legal. So you could, in theory, now I'm not suggesting you do this, but you could, in theory, have a scenario whereby you have a son or a daughter and they're helping you out in the business. They're doing some administrative work and they need to be doing the administrative work. There needs to be an actual role there that, you know, either you're doing it yourself and spending time in the evenings or the weekends. And then you give them this job and you give them this pocket money. And you might pay them 12,000 euros, and 12,000 euros, an individual can earn up to, it's roughly 12,000 euros each year without paying pretty much any tax. So if you're at a higher earner, and you're earning 100 grand a year, say, but actually you're spending weekends and evenings doing all this work and you're tired doing that work, and you say, actually, well, you know what, I'm doing all this work in evenings and weekends so I can earn this much money, so I can pay college fees or school fees or sports fees or pocket money for my children. Well, then maybe get them to do the work, you know, get them to do your admin. And as long as the amount you pay them is a representative salary, is a fair salary for the work they're actually doing, then it's perfectly legitimate. They need to be doing the work. It's perfectly legitimate. But you could then be paying them up to 12,000 euros a year. You're paying 6,240 euros less in tax because you're not paying any tax on that 12,000 euros because you're paying it to them. So rather than earning 12 grand and only having 6 left to pay college fees and rent and all those types of things, the full 12,000 euros, because they're doing a bit of work for you, the full 12,000 euros can go that way. So employing a family member it can be clever from that point of view of saving tax. And a lot of the time we find in businesses, especially small businesses with contractors and freelancers, there's that invariably the spouse, be they male or female, is helping out, is doing admin, or somebody along those lines is helping them. Now, this one I've put in because it came in as one of the questions at the start. And it said, are there boxes I should be ticking or filling in on my tax return? Now, get your phones ready, because the next slide you want to take a picture of, okay? You're going to want to take a picture of. This is everything you should be ticking on your income tax return. Ready? Why are you filling out your own income tax return? You don't know what you're doing. Would you be the engineer or the architect designing your own house and deciding what the weight-bearing loads are? No. Are you insuring your own car? No. The knowledge a good accountant has, and I'm not just saying this because I'm an accountant and I have an accountancy business, but the knowledge a good accountant has is going to make sure you are actually, and for a small amount of money, could save you a lot more than trying to do this yourself, plus the stress. I actually don't really do my own income tax return anymore because it's gotten so complicated. There's the revenue I've put in so many new fields in the Form 11 that you're kind of going, should I be even filling this section out? What does this question mean? I'm going to talk to someone in the tax team. Now, I still like to do it because I like to stay close to actually filling out the forms, but don't. The best advice I can give you today, you'll save €100 here, €200 there with the expenses. Get the voucher, you're going to save €500. But if you're not doing the voucher at the moment, buy the voucher, for €1,000, and the €500 you save in tax, give it to an accountant to do your tax return for you at the end of the year when you've got your profit and loss and whatever else done. It doesn't make sense. All right. So I'm sorry to the person who did ask that question, but I saw it. I was like, please don't do these. There's certain things you shouldn't do yourself. Okay, so we're up to the questions stage. What I'm going to do is I'm just going to stop sharing for a second. There we go. And I'll be able to check the chat. I'll reply to those, and if anyone has their hand up, just give me a shout then, and I can take a question as well.
Jimmy, just from about the question, most of the questions we've answered, up to things like, for example, if you're doing a lot of to-camera work, getting your hair done for that, is that something that you can include?
Yeah. So if I go back to if I go back to the three things you wrote down, and did you do that, Una? Did you write three things down that you?
Yes, I did.
What are your three things?
My glasses, a calculator, and a lamp.
Okay. So in terms of your glasses, can you claim those as a business expense? No, but there is probably a profession out there that could claim glasses as a business expense. So an optician had to buy a pair of glasses so people could try on glasses. Yes, they can claim that as a business expense. Calculator, absolutely yes, it's administrative. And the lamp for your desk, absolutely yes. The point of that exercise was everything. There is someone asked the question, can I get a comprehensive list of every expense I could potentially claim? And the answer to that is absolutely yes. It is everything that you could see around you. Everything is an allowable business expense. It just might not be for you, depending on what your role is or what your job is. So it's about understanding, okay, what's my business? So back to the hair. Yeah, I mean, if you're somebody who's a TV presenter, all right, RTE, TV3, and you need to look a certain way every day, then no, because that's your job. You're turning up like this every day. However, if you were shooting an advert for something that's a one-off thing that's very specific, that your hair is going to be totally different to the way you normally wear it day to day, then yeah, there's probably a good chance you could turn around and go, that was necessary. Or if you had to bring in a team of makeup people because you were makeup and hair people because you had lots of people who were going to be acting in this short film or whatever the case might be, or short advertorial, yeah, absolutely, you wouldn't have incurred that expense for all those people unless you were doing that. So again, it's think a little bit about it's not what the expense is that's important, it's what your business is that's more important.
Yeah. Okay, great. Another one here, Jimmy, when traveling for an industry conference, if you're a limited company, how much of that trip can be put on the company card? I presume what he's asking there is how much of that trip is a legitimate business expense.
Yeah, where's the question again? Read it out to me.
The question is from Alan at 1324, so a good bit up. When traveling for an industry conference, you see it? Yep.
Yeah. How much of that trip can be put on the company card? All of it, Alan. I mean, it's a business expense. So now, again, you're asking a question, and I'm answering the question, assuming positive intent. If you're going to an industry conference and it's in, for example, New York, and it's on the 15th of March. And you fly over on the 13th and don't come home until the 21st, and you're staying, in a nice hotel and eating out every night, then only a very small portion of that is a business expense. So again, with business expenses is are you taking the piss? And if you are, don't, because revenue won't be happy with that. But if you are going to a conference on the 16th and it's in New York, so you fly over maybe the 15th, or depending on flights, you had to go the 14th, and then you're home again on the 17th or maybe the 18th. yeah, you might be pushing the boat out a little bit. You might say, actually, I'm only going to take 3 nights of the 5 nights I stayed as a business expense, because with flights and not wanting to be tired and everything else, that's a justifiable business expense. So again, it's just being clever and saying, like, because here's what revenue do. Revenue interpret the rules. So there's no hard and fast rules. It's revenue's interpretation of what you did. That's the key piece there. So revenue's interpretation changed over the last number of years to your place of work being somewhere where you went to your place of work now being wherever you are. And that meant that they no longer were allowing anybody claim mileage expenses, or it is now very difficult unless you're genuinely traveling for work. You can't claim mileage expenses. So it's about interpretation. Think about a logical person sitting across the desk from you. Think about your son or your daughter or your friend sitting across the desk from you, and you had given them your credit card to go to that conference. And they said, yeah, it's on the 16th and I just want to go over a couple of days to the conference, and they come home, they're after staying for 10 days or after eating in 5-star hotels. Would you be happy with the spend? No. Revenue kind of take the same approach.
Yeah. Great. Parking, if you're going to a recording studio, for example.
Again, parking, if you're gone to a business meeting or you've turned up there specifically for that reason and you're only incurring that expense, yes. If it's parking on Merrion Square where your office is based, no, because you're parking there pretty much every day or every second day. So again, it's logical. Does it feel logical that I'm claiming this expense? Can I stand up and turn around, and if the revenue commissioners are sitting opposite the table, go, I can be genuine, hand on heart, going, I only incurred this expense because. Now go back to the Merrion Square example. My office is in Merrion Square. Some days I do drive in, but I might drive in once every 3 months. And the reason being that I need to pick up a couple of boxes that I'm bringing down to the Cork office. Yes, parking on Merrion Square that day is an allowable business expense, because the only reason I drove in was that I could pick up the boxes because I need to drive them down to Cork. So again, logic is in everything.
Okay.
Jimmy, there's an interesting one there from Neve, and it probably applies to a number of people. Membership of industry bodies, so things like the Marketing Institute, ICAD, there's a whole variety of different sectors. So again, claimable.
Yeah. There was a number of years ago, they brought a piece in and they said that all of these subscriptions and memberships were not allowable unless they were necessary for your work. So again, I can't imagine. So I'm an accountant and I'm registered with an accountancy body, and I can't imagine turning around and saying to the institute that I'm not going to pay your fees anymore because it's not tax deductible. And there was a bit of a lobbying done around that, and that's why it changed a bit. So if you're incurring the expense and that expense is necessary for you to move forward in your business, so you can't be a member, you can't really be a bona fide non-executive director unless you're probably a member of the Institute of Directors and are keeping up to date. So your cost of joining the Institute of Directors is relevant to what you do. So yes, you can claim it. Everything then needs to be taken on a case-by-case basis. But if you're a member of, I don't know, I can't even think of a ludicrous one.
The Marketing Institute or ICAD, which is
I think they're fine. They're absolutely genuinely fine. I mean, I had a client one time and pilot and spent 8,000 euros on a watch and said, look, I'm a pilot, I need to be on time. I said, look, yeah, 8,000 euros on a watch is not something that revenue are going to say yes to. So no, because,
could have got a time X.
Yeah. So again, it's just, don't take the piss. I mean, that the underlying thing here is you're probably getting a sense of, don't take the piss and think logically. Think about if it was your money and your friend, sister, daughter had borrowed your credit card and was trying to justify the expense to you for what they had done. Would you look at it like, okay, yeah, that's reasonable?
It's quite a lot of questions coming in. Jimmy, Una, do you want to cover a few more there?
Yeah.
If you work from home, can you benefit from bike to work scheme? Yes. It is for biking to work, but I mean, I haven't seen it tested. So can you expense mindfulness activities as part of the company's mental health program, including massages? Now, that's an interesting one. So if I brought somebody in to talk about mindfulness and brought somebody in to do massages, then yes, I could do that as staff entertainment, because there's 40 something people working here. If you work for yourself, no, because you're just getting a massage for yourself. So again, don't take the piss. Traveling to see a client using the train so you can work rather than driving. Yeah, you're traveling to see a client. You know, if you were traveling down to Cork for the weekend, you know, for the jazz festival and decided to bring your laptop with you, no, because you're actually traveling for leisure purposes of deciding to work. You're actually traveling to Cork or Galway or wherever to see a client, taking the train. That's perfectly legitimate. Does the electric car not have to be a commercial vehicle? No, not if it's electric. So the electric car has those BIK. In terms of commercial vehicles, you cannot go for the Nissan Navaras and the Jeeps, because if it has 5 seats in it, it's now classed as a passenger vehicle. A commercial vehicle is a van with 2 seats in the front or 3 seats in the front and a separate cargo area in the rear. And then the BIK on that has changed. It used to be 5%. I think it's 7% now. But still a good option if you don't need a family car and you do need a vehicle. Absolutely a really good option. If accruing for your tax throughout the year for sole traders, should you be working to an expected tax rate of 50% or closer to 35% as a rule of thumb on revenue? It depends on how much you're earning. Niamh asked that question. So Niamh, if you're earning 35-40 grand a year, you think your profit's going to be 35-40 grand a year, then yeah, probably 30%, 35% is plenty. If it's 100 grand a year, then yeah, closer to 50%. Now, somebody did ask the question, should I aim for a target salary and not go above this if I, don't pay tax? And the answer to that question is yes, it's 12,000 euro. Because once you earn more than 12,000 euro, you're going to start paying tax. And here's the thing, the more tax you pay, the more money you're making. So that's a good thing, believe it or not. So, if you're paying a lot of tax, it means you're pretty good at what you do, pretty damn successful. Well done, you. Keep doing it. But no, there's no kind of sweet spot where you go, if I earn any more than that, then I'm gonna lose a lot of money. And we'll see some of that now. 10 minutes left, so I'm gonna move on to some of those things.
Interesting one there, Jimmy. Yeah, are there any implications for my dad as a pensioner to do some admin work? Does that affect his pension? So this is back to employing a relative or family member.
It does, yes, because it depends on what pension he has. So the old age pension is taxable. If it's the only pension you have, then you're probably not paying any tax because it's so small. But if he has his old age pension and he has an employment pension, then his tax credits will be typically with his employment pension. And then it depends on how much does he now earn combined. So if combined between his employment pension and his state pension, he's on about 20,000, 25,000 euros, then he's using up not quite all of his tax credits. So he could potentially earn some extra money up to 40,000 euros in total at the 20% tax band. So yeah, there's potential. But if his private pension is paying him 50 grand a year, or between his private and state pension 50 grand a year, he's going to pay tax. Now, depending on what age he is, he might not pay any PRSI and he might not pay any USC. So again, there's a couple of unanswered facts in that. But I don't think it affects his pension because the state pension is the state pension. You get that whether you're a millionaire or a pauper once you've paid the right PRSI number of PRSI payments during the course of your working life. My husband is a director of my company, but not on payroll. Can the company contribute to his pension? Short answer that is yes. You would need to give him some type of salary, but as a director, is he just a named director or is he a shareholding director, a proprietary director? So talk to your pension advisor, because depending on some of the different aspects there, depending on how much shareholding he has, depending on lots of other little bits and pieces. But the short answer is yes, the company can contribute to his pension, but just make sure there's a couple of things in place that would be right. Subscriptions for software, absolutely yes, you need those for business. Can I set up a limited company on your own, or you need more than one person as a director? You only need to have one director, but you do need to have a separate person who's the secretary, but sometimes a corporate entity could be a secretary. So for example, we have a company called Contracting Plus Secretarial Services. So if you want to set up we set up a company for you. You're the only director, the only shareholder, but Contracting Plus Secretarial Service becomes your secretary and does all the work there for you, all the secretarial work, which is filing stuff for the CRO, etc., etc. Are revenue going to start putting the same expense limitations on Politicians,
Move on, Jimmy.
interpretations are very different for them. Interpretations are very different for them. I can't answer that. If I had the answer to that, I'd write a book and I would probably stop doing these webinars because I'd have enough money in my pocket. For mileage expenses, if you travel across the country to meet clients at their premises, can you claim those miles? And is there a cap? No, there's no cap. I think, again, if you're operating as a limited company, have a look at Google the civil service mileage rates and follow those because they're revenue approved. The bigger thing there is, why are you traveling across the country? Was it necessary to meet the clients? And could you be challenged on that? Again, I could go to Belfast twice a month over to Sligo, so it all adds up. Absolutely, it does. It sounds like you're doing a lot of mileage. The question there is, what are you actually doing? Like, what do you work at? I mean, are you somebody who actually needs to be on site because you're a sign maker, so you actually need to go and see the premises and measure up, or are you a business consultant or a web designer whereby actually you could have had that meeting on Zoom where people don't travel just for the sake of it. So again, there's an element of, I want to build rapport with this client. I want to keep them happy. So it comes back to that. Was it necessary for business? I mean, really necessary for business? And are you taking the piss? And if the answer to the first question is yes, and the answer to the second question is no, then yeah, I think that's fair enough. County Chamber of Commerce fees, yes, again, they're business networking. As a limited company, can you put a proportion of your salary into a pension, or can you put as much as you like? Is there a minimum salary you have to take? No, not necessarily a minimum salary you have to take. And as a limited company, you can put a lot more into your pension. I'll actually have a slide on that. I'll do it in a second. Thanks so much, Jimmy, for all the info. Thank you. You have to run through a meeting. There's no tax deduction for running. You should take a taxi. Keep my words.
All right, Jimmy, I'm conscious of time and time for you as well.
Yeah, so okay, so I'm going to share screen again.
We'll wrap up the questions for now. Look, I mean, the response on the question side is the biggest one we've ever had. That's to be assumed.
Hang on, slideshow. Oh, I can't see now with all the different things. Just close that.
Yeah, we can see it, Jimmy.
Yeah, I'm trying to do it here from current slides. There we go. Okay. Now, just going to close the chat. What to do with all the tax you've saved? Okay. No. Okay, pensions. Pensions is free money in the future. Okay, it's very hard for us as humans to say, I'm going to put away this much money today. I'm going to be down 200 euros, 300 euros, 500 euros a month because I'm not going to see any of it. But the reality is, first point there, if you're in a limited company, you're getting 52% tax relief versus 40% as a sole trader, which means for every 1,000 euros invested, there's 120 euros more for you in the future. You do that over enough months and you get your growth every month or every year over a number of years, that turns into a lot of money. When you retire, you can take up to 200,000 euro tax free out of your pension pot. 200,000 euro. Think about that for a second. You would have to earn 400,000 euro throughout your lifetime to have that 200,000 euro tax free. So it's smart. The next 300k you can take at 20%. So essentially you have probably an effective tax rate there of 200, 300, 500,000 euros at 20%. Oh, I don't know, what's that? 15% tax rate on €500,000 euro? So smart. So pump money into your pensions. It's going to look after you in the future. It's free money. Saving for a rainy day or a big life event. Okay, so now take this with a pinch of salt because you need to have the right structure in place. But it is perfectly possible for you in a limited company to earn, let's say, 100,000 euros a year, keep the math simple, live on 60,000 euros a year and save 40,000 euros a year. You do that for 5 years. You pay corporation tax on the 40,000 euros a year, 12.5%. So let's just call that 5 grand. Okay, so you're left with 35,000 euros in your company. Or even, let's make the figures more realistic. Let's say you're earning 70,000 a year and you can live on 50,000 and there's 20,000. 12.5% tax. Let's call it 3,000 euros. You're left with 17,000 euros every year in tax. You do that for 10 years. There's 170 grand sitting in the company. 170 grand sitting in the company. Okay. Now, if you do it for 5 years, there's half that. What's half of 170? 85,000. 5 years is a more achievable target for a lot of us. Now, you can actually liquidate your company, okay, in certain circumstances. And all the cash comes to you at an entrepreneur's rate of 10% versus a standard gain of 33%. So you could actually take that 85,000 euros or 170,000 euros at 10%. And the entrepreneur's relief ceiling is €1 million in your lifetime. So you can be very clever about that. Okay. So it could be a case that you're want to save a huge amount of money for college fees. And also bear in mind, you can still use a company to save money and pay the corporation tax rate. Okay. And start to build up a nest egg for an age when if you have kids, if your kids can work for you and you're saying, absolutely, I'll give you pocket money and pay your college fees, but you've got to work for that. And they end up working, doing something for you and for the company, and you're paying them out of the company, and they can earn up to €1,000 a month tax-free. That can go a long way to paying college fees and kebabs on a Friday night or whatever else they're going to do. Wedding day, new home, like mortgages is a big thing. Can sole traders get mortgages? Can contractors, freelancers get mortgages? Yes, they can. But I would always say use a broker who knows what they're doing. We have a number of them we can recommend, as opposed to going directly into your bank, because a lot of the time the mortgage broker in the bank doesn't understand how contracting and freelancing and sole trade works and the difference between profit and income and all those types of things. So work with a professional who understands what they're doing with the right broker, and absolutely. You can get a mortgage. I was a sole trader. I'm actually employed by the company now by Contracting Plus, and director, and put down as an employee essentially for things like mortgages. But I was a sole trader for years, and I've had 7, 8, 9 mortgages. I don't know. Not because I've 7 or 8 or 9 properties, I hasten to add, but because it's good to shop around and keep changing. Entrepreneurs relief I've done. I'm flying to this now because of the time. So retirement relief is a relief you can claim if you're over the age of 55 and under the age of 65, and it's 750,000. So again, if you're starting off now, for example, and you're in you're young and in your 40s or in your 30s or even in your 20s, and you started to build up money in your company, you could actually take out 750,000 euros tax-free. So although the last slide we were looking at, we were saying 10%, this is 750,000 euros tax-free under the retirement relief. So you can take 750,000 euros into your company tax-free. Nice. And that's an individual amount. So again, if you're in partnership with somebody, whether or not that person is a spouse, and you get to 1.5 million, you can both take out the 750,000 euros tax-free, provided you're over the age of 55 and under the age of 65. You can do it after the age of 65 as well. Just the 750 drops, I think, to 500,000. So again, a nice thing to know about. I left these 3 things for the last because they're bigger. We're in a world now where everything is on demand. Our food, our shopping, everything. So the expenses, that kind of puts money in your pocket pretty quickly, right? It's easier for us to comprehend. Things like retirement relief, entrepreneurs relief, and paying into a pension. They're actually where the real money is, but it's going to take us a number of years, decades, to get to a pot that's big enough for it to be worth our while. Just start small every single day, every single week, with saving a bit of tax and saying, how can I use that money? If I didn't take out that 500 euros this week, would I even miss it? Some of us would, depending on what's going on in our lives. But others go, well, I could probably cut back somewhere else. Or I could start with not taking 150 euros and then up it or down it or whatever else. Don't ever spend money unless you need to, especially not just to save tax. Thanks very much.
Jimmy, that was great. Yeah, fantastic. And judging by the interaction along the way and the amount of questions, again, hopefully you got a sense that, look, this is a topic that is perennial, never goes away. People are always interested in it. May not be the topics that we all want to address, but nonetheless, they're really important when you're in business, and particularly when you're freelancing or contracting. Again, I put it into the chat box for those of you who aren't aware of it, but on our website, we've done a package with Jimmy's company last year. We started it last year, and a number of people have signed up for it. But again, we encourage you to really have a look at that. There's different elements to it. Contracting Plus primarily are there to provide advice to contractors and freelancers. So it is financial advice, and it's continuous along the way, but there are other elements to the package. So it includes things like an online learning hub, and there's hundreds of courses on that. There's access to discounts on things like fuel cards, holidays, retail, and so on. And also there's a fitness platform, again, if you want to do some useful exercises along the way to keep you at the top of your game. So
And
again, if you go to
insurances
the
as
website,
well, Peter.
is Rich?
The insurances as well. Did you mention that?
Oh, the
Or did I miss it?
insurance, sorry, exactly, yeah.
Yeah.
So things like health
Well, I mean,
insurance.
this is a big
is
thing
going
for
up.
people, especially going for tenders.
Yes,
Yes.
professional
Yeah.
indemnity insurance is becoming a really, really important thing, and I think we're going to have to, you know, like certainly a lot of freelancers would ask us for advice on how they can be more successful in tenders, and that's one of the first things that they will need is professional indemnity insurance in place. And it isn't all that expensive, but you know, as part of your offering, it's kind of wrapped in. Which is really
Jimmy,
good.
can I just ask a question? I
Um,
put it in the chat box earlier on. What makes sense, or at what level does it make sense for a freelancer who might have set up as a sole trader to consider a limited company option?
There's no hard and fast rule, Peter. I would say it's about how much you are earning and how much you need to earn. So I mean, you could be somebody who's in the, shall we call them, the autumn years of life, whose kids have grown up, whose mortgage is paid off, who can and with pensions and everything else, is probably happy living on an income of, let's say, 30,000 euros a year, but is earning 50 or 60,000. You could be ready for a limited company at that stage because of the tax savings it could offer. At the same time, you could be somebody who's in their 40s, still has their kids to go through college, is still paying off a mortgage, and is earning, you know, 100 grand a year, but actually needs every single penny of that. So there's nothing spare to save, and they're not putting more than the percentage allowed into a pension, you know, so they're not missing out on any tax relief. But I do think companies are not just about the tax element; they're also about the insurance element. Okay, and it's easier to get company insurance than it is to get individual insurance. But the other thing they're about is about limited liability. So if, you know, if something did go wrong, we always work on the basis nothing will go wrong, but if something did go wrong in a company, it's the company that made the mistake, not, as long as you're not committing fraud, not you individually. So it's the value of the assets of the company, which is a really,
and just to follow on
point.
From that, in terms of say, the contracting plus membership, then is that claimable as a business expense for
absolutely? Yeah. And we do that on a monthly basis. So we take it's a monthly fee, it's a management fee, and that comes out. We'll help you do your payroll. So you never even, it's not, you don't have to pay the money back out again. You're getting the tax relief each month that goes by.
Great stuff. Okay, Una, anything that you're seeing there in the chat box?
No, everything in the chat box is pretty quiet now, just everybody saying thank you very much. I just have a couple of things to say maybe before we wrap up, in terms of just a little bit of housekeeping, if that's all right. We have, guys, as you know, we have the Freelancer group on LinkedIn, the Indie List Freelancer group. If you are a member, can you just please check your notifications just by clicking on the bell on when you go onto that page, just to make sure that you are getting notifications, because we're starting to kind of put up information on jobs and roles that we're trying to fill. Another thing just to tell you is that we're in the process of looking at how to integrate a jobs board as part of WorkSuite. So more to come on that. And then in terms of these lunchtime sessions, we've got a couple coming up in the near future. One is about using ChatGPT as part of the creative process. So that should be a really interesting one. And the other one we're planning on developing is how to write a brilliant proposal, because what we're seeing actually from talking to freelancers is that they go and they write a proposal, but they leave an awful lot of money on the table. So we want to kind of help you write a proposal that's actually going to help you upsell when you're in the moment of business development. But if there are any other subjects that you would love us to be covering off on these sessions, just please drop us a message either on WorkSuite or over email. That's all that I want to say. And just thank you, Jimmy. Thanks for all of that. It was absolutely fantastic.